Okay, so tonight we have a special call all about tax and business planning for network marketers, independent contractors, self-employed business owners, and basically anyone who has a 1099 form to report on their tax return. So obviously it's a big topic, very important, and we have a very special guest with us tonight. She's a tax planning expert, and her name is Sheree White, and she's going to walk us through all of this and clarify a lot of the issues and mistakes that network marketers and small business owners often make. And so hopefully we can get some insight that will help us avoid all of this trouble and save more of our hard-earned earnings. And so Sheree, thank you for joining us. Why don't you take a little time just to talk about yourself and your business and what you're into?
Okay, thank you, Michael. As Michael said, I am a tax planning expert. My husband and I own a accounting practice. We do accounting, bookkeeping, tax for both individuals and businesses, payroll, and other financial services. What makes us unique is that we are both enrolled agents, and what enrolled agents are we're actually the tax experts, and that's not us saying that. That's the IRS saying that, and that's because our credentials are granted by the IRS, and our continuing education that we have to take every year has to be strictly in tax and in ethics related to tax.
Mm-hmm. Wow. Okay. So we know we've got the right person for the call tonight. Thank you for joining us once again. So I want to just start off a little bit just with the basics, if you don't mind. Let's talk about 1099 income, what that is and why that's relevant to network marketers or small business owners.
Okay. Well, if you think about the fact that when you work for an employer, the employer gives you a paycheck every week or every 2 weeks or whatever the pay cycles are, and they take payroll taxes out of that money. So that you're an employee. When you get paid and no taxes are taken out, no federal taxes, no Social Security, no Medicare, none of that, and you are your own boss basically, then anybody that pays you $600 or more is supposed to, any business that pays you $600 or more, supposed to issue you a 1099. And the implication for that is nobody's paying taxes for you. That's your total responsibility. And for network marketers, the issue is a lot of them don't know that this is their responsibility, because having been in network marketing myself, and my husband also is a veteran of network marketing, we know that network marketing companies tend to train their people on how to do two things: how to offer the product or service and how to offer the opportunity. And the important things about how to keep records and how to file taxes with the income that you earned, all of that gets left to the individual to figure out. And what we see come tax time is the first year, they get this piece of paper that says 1099 miscellaneous on top, that has a number in box 7, which is non-employee compensation, and they come in with it. And if we do as long as we're doing our job correctly, we're now asking them for what kind of expenses did you incur during the course of the year related to that income? And since nobody told them to save their receipts, they don't have a record of any of those expenses. And what that means is that they would be paying tax on every dollar that they earned through the network marketing or through self-employment. Whereas their expenses, if they kept track of them, would help reduce that income so that they pay tax on less money. We want our clients to keep every penny that they possibly can legally in their pocket.
Right. Yeah, you can see how that sounds very simple. Keep your receipts, but then what do I do with them? Or
Okay.
did I even get them all? How do I do that? What's a good system for that? So many things to think about. But
Yes.
oh man, but I mean, I wanted to kind of step into this a little gradually. Can we talk about like the business structures a little bit, like LLCs and S corps and sole proprietorships, individuals? How do those kind of factor into the world of network marketing or single business owners?
Well, most people, when they start a business or when they get involved in network marketing, they don't create a business name for their business.
Hmm.
So they're operating under their own name. The checks are being written out to them in their own name, and they're what's called a disregarded entity as far as the IRS is concerned. Doesn't mean they don't have to declare their income and pay taxes. It just means that they don't have a formal entity type. They're not a corporation, they're not a partnership. So they're filing their taxes as a sole proprietor on their personal tax return. They didn't register their business with Sunbiz. Uh,
Hmm.
they're just going about their business, which is okay. You can do that. The issue with that is you have no liability protection. You are your business and your business is you,
Hmm.
right? So you mentioned LLCs. So I'll tell you that there are a lot of people out there that think LLC means limited liability corporation, but it does not.
Mm.
It means limited liability company. So what it does, if you register your business, and if you're going to be an LLC, then you have to register your business with Sunbiz as an LLC.
Hmm.
And Sunbiz is the state of Florida. That's where their business registrations are done. So you'd have to register as an LLC, and that has other implications to it. Record keeping is still, you still need to keep records. People think if they're a sole proprietor, well, it doesn't matter that much. But if you want to be treated as a business, you have to behave as one.
Hmm.
That's a whole other topic.
Hmm.
But if we talk about going back to LLC, an LLC, it says limited liability company, but as an individual, you still have your limited liability is very limited
Hmm.
because you then you're still filing on your personal tax return the way you would if you were a sole proprietor. By default, the IRS says, oh, they're a disregarded entity, so we're going to treat them the same as if they were just operating under their own name without that LLC. You do have the option, though, of making a tax election to change how you are taxed.
Okay.
The further we go up that list that you made, that you gave, the
Hmm.
more complicated it gets, and the more stringent the record keeping requirements are.
Yeah.
Yeah. We don't think about that. We just think,
Yeah.
oh, it sounds nice to
Mhm.
be this, or it sounds nice to be that.
Mhm.
And nobody thinks in terms of what that truly means.
Right. And I think you're referring to S Corp.
I am.
Yeah. Okay.
And C corporations and partnerships.
Hmm.
So let me talk about partnership for a second. A
Okay.
partnership is by default two or more individuals that I'll use individuals for the sake of simplicity, because there are other options available for forming partnerships, but it is two or more.
Hmm. Two or more.
So let's say you were in business and you decided to form a business with your best friend,
Hmm.
or better yet, you form a business with your wife
Okay.
or your husband or your significant other. That's a partnership by default if you add LLC after the name.
Oh, okay. So
And
LLC.
if you add LLC after the name, it's automatically, the IRS automatically considers it, as long as there are two, a partnership. See, a husband and a wife, uh, can can form a business together as long as they don't make it an LLC. They can be what's called a qualified joint venture. That has special tax rules, and I'm not going to go into that here
Yeah. Yeah. Okay.
because that could be a whole 25-minute presentation on in itself.
Yeah.
Just like we could make S corps and partnerships and C corps.
Mm-hmm.
So, for sake of simplicity and time, when you form an LLC, you can fill out a form that that allows you to make a tax election, saying I want to be taxed as an S corp
Mm-hmm.
instead of as a disregarded entity if you're an individual. And for many, that's advisable.
Mm-hmm.
Because if you're, I'll give you one of the main reasons, and that's taxes. It's a separate tax return. But if you are the kind of person who can't be disciplined enough to put money away from every sale to cover taxes, then an S corp is not a bad choice, even though it requires a separate tax return. Because with an S corp, you can take a paycheck.
Okay.
As a sole proprietor or single member LLC that's being taxed that as a sole proprietor, you don't take a paycheck.
Mm-hmm. So you're basically paying yourself in an S corp situation.
With an S corp, you are an employee of your own S
I
corporation.
see. Okay.
So you get a W-2, and taxes are taken out of your pay, and the business pays the employer's share of the taxes. When you are a sole proprietor filing on your own tax return, you are responsible for your federal withholding and what's called self-employment tax, which is 15.3% of, I'll say your income, but when we get down to the bottom line, it really is your profit.
Mm-hmm.
But during the course of the year, you don't necessarily know what your profit is. So I tell people put away, and I tell them what percentage based upon having a conversation.
Mm-hmm.
You have to have a conversation to know really how much to put away. And then there are dates to make estimated tax payments. So this is not being in your own business, whether you're in network marketing or you're in another kind of business, is not simple.
No, I can see that. Yeah.
People think it is, but it isn't.
Right, right. Yeah, so this is obviously something a lot more people need to look at. I know there probably are a few experienced people who've gone through all of this and maybe found out the hard way, or got smart right away and called someone like yourself, hopefully. But I hope everyone's ready to take notes or rewatch this over, because there's going to be, I mean, that right there is a wealth of information, what not to do or what to be aware of. And, I wanted to kind of just say, I mean, because you talked about how difficult it might be to maintain. That's one thing we've got to factor in. And if you're going to go out there and start this on your own, and just kind of try to wing it and do your own taxes, I mean, which is honestly what I did for a little while. I went back a couple years and started to find various startup costs and various research and development costs and things I missed. And I refiled my taxes for a couple of years. And wow, I had no idea what I was getting into, because I didn't know if it was worth the money that would come in. And of course, it took way more time. So I would say that, I got a lot out of it in terms of the knowledge. It was like taking a university course. But
Yes.
I don't know if I should have just went right to someone like yourself and say, hey, let's refile all my taxes and save me the time and trouble, So, I mean, I was going to say, what would you say to people who maybe have been in the business for a little while and they realize, wow, I've missed this, that, this, and that. Should I go back and refile? What kind of thought process would you recommend there?
Well, let me say, first of all, we give a complimentary consultation,
Hmm.
which includes a review of prior year tax returns.
Okay.
So that's step one,
Hmm.
basically. Um, because sometimes you're right. It's a question of, is it worth going back and amending the returns? We don't just refile the returns with the corrections on them. They have to be amended.
Hmm.
And that's a process in and of itself, because you're looking at each item, and if you're having a professional do it with you, then that professional, or do it for you, I should say, that professional is going to be asking a, a series of questions. And I emphasize the word professional because this is kind of important. This is important to us. There are a lot of people out there that hang up a shingle, and that's what I'll call it, and
Hmm.
say they are able to prepare income taxes because all they had to do that was was apply to the IRS for what's called a PTIN. It's a Prepare Tax Identification Number, so that they're not putting their social security number on the tax return. And
Okay.
it's a way of for the IRS to track tax preparers and look for patterns in tax returns if there are audit issues
Oh.
related to certain clients.
Hmm.
So, but all you need to be able to hang up a shingle is a PTIN, and that means that it's buyer beware,
Yeah.
basically, that people can be going to someone who really has no training,
Mm.
and they've taken a class on how to prepare tax returns, or they think they can do other people's returns because they do their own.
Right. Hmm.
So uh, that's why I use the word professional, because a tax professional is someone who takes continuing education and lots of it, so that they're current on the tax laws and they know exactly what kinds of questions to ask.
Hmm.
And if they're really good at what they do, they know how to help their clients file accurate returns with a reduced risk of audit.
Okay.
I can never guarantee a client that that they will never get audited.
Hmm.
But I can say that sole proprietors are at a higher risk of audit than somebody who isn't a sole proprietor. If you go to work and you have a W-2 and you file your tax return, your risk of audit is much lower than someone who has self-employment income, whether it be from multi-level marketing or network marketing, I should say, or um, just because they chose to start their own business doing something that isn't in the network marketing arena.
Hmm.
Their risk of audit is higher because there are so many things that can be done to, I hate to say manipulate the numbers,
Yeah.
but that's what it is in reality. It's manipulating numbers to make them come out the way the client wants them to.
Right.
And we see signs on the side of the road. If you have one child, we can get you so much and so much in a refund. And if you have two children, we can get you more. And really, that's kind of unethical to advertise that way,
Yeah.
because no one can guarantee that without knowing income and other factors.
Hmm. Absolutely. Wow. Thank you for clarifying that. I mean, so much going on there. Um, but like, what comes back to my mind is, a professional like yourself, how you just highlighted the difference between someone who just has a quick and easy title and someone who is truly invested in the business, knows the ins and outs. You guys, I like to think of it as this, like, have a system, a process that you use. And I know that as network marketers, our company is teaching us how to leverage systems within our
Yes.
company and with outside as well, with partners
Mhm.
such as yourself. So that's something we definitely have to think of more broadly, is how many systems can we leverage to save our time, to be efficient. And when you look at someone who's committed to the business, ultimately it's only going to grow. More and more income, more and more receipts, more and more tax
Yes.
situations to deal with, right?
Yes.
Yeah. So it's only a matter of time until you say, okay, when are we going to find our tax advisor and really come up with a plan? And I think that's where you come in, Sheree. I mean, this is something where I'm pretty confident there's a lot of people out there who need this advice and are making those mistakes and probably are kind of kicking themselves for all the things they missed or didn't take care of or never got around to doing, right? So,
True.
yeah, but I don't know if you wanted to add anything more with the record keeping side of things, but I know there's a lot there.
There is,
Yeah.
and there are different ways of keeping your records, but the most important tip that I'll give, I say it's most important because for somebody who comes into my office with a shoebox filled with receipts, I mean, we'll be more than happy to help clients who want to bring in shopping bags of receipts and shoeboxes of receipts come tax time. But it costs them more.
Yeah.
Certainly more than if they kept good records all year. And we have people who come in with spreadsheets. And we have people who come in with using QuickBooks. That's what we use in our office to help our clients that really understand the value of having a good record keeping system. I teach QuickBooks. There's actually, shameless plug, I teach, one of the places I teach it is in the Palm Beach County Adult and Community Education.
Okay.
So there are classes starting the week of September 9th. And I teach QuickBooks Desktop on Mondays at Palm Beach Gardens High School and QuickBooks Online at Jupiter High School on Wednesday. And you can register for that through the Palm Beach Schools.org website. And the reason I say shameless plug is because I'm teaching it. But the reason I'm suggesting it is because if someone is interested in at least trying to keep their own records, it might be worth, the class is 8 weeks, it might be worth taking it. If they don't want to wait that long, we QuickBooks Desktop or QuickBooks Online. I can do it in person. I can do it remotely. We use Zoom a lot for our remote lessons.
Yeah.
So it's possible to do that. And of course, one of the questions that someone's going to ask, and again, this is another session, is QuickBooks Desktop, QuickBooks Online, what's the difference?
Right.
Which one should I use? And that's a whole other conversation because it depends upon what you want to be able to do. But what QuickBooks does give you, as opposed to spreadsheets and anything else, is it gives you the ability to be able to tell at any given time, that's why you want your records kept up to date, whether or not you're making a profit.
Okay.
And that's important. And as far as the receipts are concerned, either scan them in, and then you can discard the receipts, scan them into your computer, and put them in a file so you can discard the receipts, or photocopy them and attach the originals to the photocopy. And here's why.
Okay.
In 3 years, if you get audited, those receipts will be unreadable. And if the IRS cannot read the receipt, the expense did not happen.
Ooh. Yeah, you don't want to find out that rule the hard way, right?
Right. So if people get nothing else out of this session, that's a very important takeaway.
Photocopy your receipts, guys.
Or scan them in.
Yeah, or scan them, right.
But you also need to label them for what they are. In other words, if you're going to networking meetings or training sessions, identify what they are. If you're taking a client out for or meeting a client over coffee and you're paying for the coffee, then you need to identify who you were with and what you discussed. Briefly just discuss the opportunity or something like that. because they are those two things, networking meetings and taking a client or potential client out for coffee. In our book, they are tracked differently.
Okay.
So you get different tax benefits.
So whether they're a client or whether they're a prospect, it's a different category.
No, if they're a client or a prospect, it falls in the same place.
Okay.
But if you're going to a networking meeting, like
Right.
you and I do, that goes in a different place on in your record keeping.
Okay. Yeah. Good to know.
I like the look on your face.
My head's spinning. Yeah, I know. Well, I mean, this is all awesome information, and we'd like to, at least distribute this through our network and have people reach out to you for more questions,
Sure.
and work with you, of course. And you mentioned you do the free consultation.
Yes.
And how about the best place to contact you? How do people get a hold of you or learn more?
Oh, wow. There's several ways.
Mm-hmm.
You can call me, and our number is 561-376-2564.
Mm-hmm.
That's 561-376-2564.
Mm-hmm.
You can text that number also, but if you're doing it, it would be helpful if you told me who you are.
Right.
I got stumped for a minute because I saw and of course you can go to our website.
Here it is. Yep.
Yes. You can email me at Sheree. That's SHEREE at BIZ, and that's our domain, BIZSVC, the number 4, letter U.com, or you can fill out the contact us page on our website.
Right here. And I know you guys have some blog posts here.
Yes.
And you have a Facebook page, correct?
I do. Right. You can sign up for our newsletter on our website.
Okay.
You can go and like our Facebook page. We would love that.
Mm-hmm. Perfect. Yeah, now you're talking our language for sure. Facebook. And
you can reach out to me actually probably also through Facebook Messenger. I'll definitely get the message.
Right.
So there's lots of ways to reach out to us.
Excellent. Okay. Well, how about this? I know we've taken a lot of your time tonight. I'm totally grateful for all this great information, but if there's anything else you wanted to add or highlight, or out of all the stuff we talked about, one more thing that you would like to just make sure we walk away with, what do you think that would be?
Well, by the time, if we're talking about people in your network, by the time they've seen this, they've already committed to doing or being in network marketing. But what I'll say is, before you make a decision to change how you're taxed, meaning make an S Corp election, even go into an LLC, you need to seek the advice of a professional.
Okay.
And really, we like to tell people that the best time to talk to us is before you get started, because then we can help you get started on the right foot.
Right. So
much easier to start correctly or start the best way possible on a solid foundation than to have to fix it later.
Yeah.
It's easier and cheaper.
Hindsight is 20/20, right?
Right.
As we all know.
Yes.
Well, awesome. Well, thank you so much. I totally appreciate you taking the time to educate us, and we're going to do our best to get more people to come your way. And we look forward to hearing more about what you're doing and having you back, perhaps.
Anytime.
We'll do it again sometime soon.
Sure. It was my pleasure, Michael. Thank you.
Likewise. Thank you so much, Sheree.